Okay, folks, Miguel here, Roof Talk. So, I just wanted to go over the insurance process. I had someone that reached out to me and they really wanted a crash course on insurance. So, I'm just going to go ahead and dive into it. So, there's two claims you're going to do. Okay, so one is going to be all other perils, E. And the second one's going to be hurricane. A-N-E, right? So these two are separate because they're two separate storms. So all of the peril is going to be like a windstorm, a hailstorm, something very minor, but does some damage to the roof or to the structure, anything. Just pops out of nowhere. But a hurricane, self-explanatory. A hurricane came by, passed through, and that's what caused the damage. Now, each one is going to have different deductibles, right? This one is going to have, I'm going to tell you right now, probably $500 to 2.5K deductible, where this one is going to be probably 2 to 5% of the value of the home. So this is going to be thousands. It usually is. On average, what I have been seeing, hurricane deductibles, they can be anywhere from 5 to 20,000. Just depends on the value of the home. Okay? So remember, how these both tie in with each other, it's real simple. Now, the next thing that separates the both of these is going to be date of loss. That's the storm date. That's when the loss occurs. So whenever the damage happened, you have to use that date when it happened. So if it happened during a hurricane, it's going to be a hurricane claim. If it happened during, let's say, a windstorm, a hailstorm, it's going to be all other perils. But you got to get this date right, because if you put a storm date for a date there was no storm, because the insurance company is going to check on it, they're just going to deny the claim. So again, you got the two different types of claims. You got all other perils, and then you got hurricane. And what's going to determine both is going to be your date of loss. What happened on that date, what occurred, and the type of loss. So there's going to be one of the two. And that's usually how insurance stuff goes. Okay? So now that we understand the two different types of claims, right, we're going to go over exactly how it goes down. So the first thing that's going to happen is, one, you got to call it in. You do this with the homeowner. I'm telling you, if you do this with the homeowner, the likelihood of you getting the contract to do the work goes up. And then once they do that, you're going to call them. They're going to go through the whole steps. You're going to get a claim number. And then they're going to talk to you about the adjuster meeting. This usually happens, I say 24 to 48 hours. They call the customer, and then within a week, they're coming to the property and they do the inspection. If you want to win over, a lot of, or get some good brownie points with the homeowner, you definitely want to be there for the adjuster meeting. And on top of that, you're the professional. You know it. You're the construction professional. You know how a roof's supposed to be done, how a home's supposed to be built. Some of these adjusters that come out, depending on who comes out, they may or may not be the most knowledgeable. So it's better if you, the roofing or construction professional, wherever you are, go out and be there for that meeting, because you don't know what they're going to document, and you want to be there when they're documenting, because they may miss stuff. They're human like us, so they may miss stuff. They may be having a bad day, and next you know, they missed a ton of stuff, and that's what you're there for. You're there to defend the homeowners. Like, hey, look, there's a lot of stuff going on, all right? Once you get through the adjuster meeting, there's going to be a determination, right? And I call that the determination period. This is usually 2 to 4 weeks. Because what's happening, once you meet with the adjuster, they take their pictures, they do the report, they send it to a desk adjuster at the corporate office. They're going to look at that little note and the pictures, and they usually get an estimate from the adjuster. Okay? And so they already know what it costs to replace the roof, repair it, whatever's going on, they already know because that adjuster has already calculated all that. But during this determination period, the desk adjuster is going to determine if they're going to do one or two things. They're going to repair the roof or repair the structure, or they're going to replace a majority. It just depends, because when it comes to insurance, it can go so many different ways. There can be mold remediation, there can be roof structures, there can be interior work like drywall, there can be siding, baseboards, new flooring, new kitchen cabinets. There is so much that can occur when there's some kind of leak or damage to the home. And that's where you, being the professional that you are, you need to be there for that meeting to make sure they get every single thing that's damaged in that house. And if you're there, you give them all that stuff, you make sure they put it in there, you get that determination period. Now, you kind of want to be involved in between this here. And we're going to go into that in a minute, okay? So there's that determination period where they're going to see if they're going to do it or not. And then, of course, you get the approval letter. And that's going to let you know exactly what they're awarding the customer. It's a repair or a full, replacement of whatever's going on. Now, this is a lot of times where you as a professional have to get involved. And this is where when it gets hairy. And this is where, once you know the process, you're going to be good to go. So we're going to go into approvals, or we're going to go into that part. We're going to go into the part where, let's say, they get the letter, okay, the determination letter. So like I said, it's going to either be repair or replace. If it comes back repair, they're just going to give you the minimum amount of money. If they're good, they're going to give you a really good amount of money to repair everything. Now, right here, once it gets to the approval part, you're going to get a letter, and it's going to break down everything, and they're going to give you an estimate. And that estimate is going to have a breakdown of exactly what's going on, and it's going to come in exactament form. If you don't know how to read an exactament, I mean, if you look at it, it looks like a formula or something like that. If you never read it before, but it breaks down in there. You're going to see these terms: CV, this stands for replacement cost value. E. All right. You're going to see ACV for actual cash value. And then another term you're going to see is depreciation. And it usually comes in a form, it's either going to be non or recoverable. And when you get this estimate and the breakdown, it's going to be like for like. So if you have a 3-tab roof, they're going to give you 3-tab roof. If they know it's 30-pound felt. So basically, they're going to give you like for like. And that first check, basically, they're just going to give you the value of what they say before the loss occurs, what the value of that loss is. So even though you pay $20,000 for something, they're only going to give you the value with the age of what it is there, and half the time they're only going to give you half, and it's going to be like $10,000. Okay. But once you do the work and you give them that invoice, you ask for the depreciation, the recoverable depreciation. In their policy, it may have non-recoverable, meaning they're not going to give you anything. So whatever they give you for actual cash value is what you're going to get. Now, this is where you being a professional, you need to get involved before this. What I would highly recommend you do, once the adjuster meeting has happened, and hopefully by then you've already signed some kind of commitment with the homeowner. And if they authorize you to communicate with the insurance company, send them an estimate. Send them your estimate on exactly what you're replacing and what the cost is going to be. Because that's going to help when it gets to that desk adjuster and they start BSing about how much they're going to pay. They're going to see your estimate versus that. Because I'm going to tell you right now, sometimes they don't count for code, ordinance of law, or code upgrades, any of that stuff. It's just someone who's doesn't even live in the state, who is just giving you a price on what they, pretty much what a computer tells them, and then they spit out a price. And half the time, it's off. So this is where, before you even get to this part, if you send them an estimate or start that open channel of communication with the desk adjuster, and as long as you're professional and you're reasonable with your pricing, you're going to get what you want. But it all starts at, really it starts at that adjuster meeting. Talking with that adjuster, tell them who you are, what kind of commitment you got, but also, you know, getting into, in with the desk adjuster. Because a lot of times, sometimes, you know, the field adjuster can be an a-hole, or he don't want to communicate. So sometimes through the homeowner, you got to figure out who's the desk adjuster is, and you got to get your hands dirty, and you got to start sending them your own estimates. But I'm getting a little far ahead. There's going to be the estimate part where it's going to have stuff like that, right? So I'm going to break this down a little bit more. But again, let's say if the home has a damage to the roof, damage to drywall, damage to structure, damage to cabinets, or, you know, baseboards, whatever it is, it's going to be in that estimate, breaking it down, and they're going to tell you exactly how much the initial part of it they're going to pay, and then if there's any recoverable depreciation afterwards. Okay, so I'm going to break down usually how they pay out and how they get a letter, the approval letter. Okay. Ugh, I'm horrible with A's. All right. So usually you're going to see their RCV, so replacement cost value. So let's say they gave you about $20,000. They say to replace everything's $20,000. Okay. Then you're going to see something that says less deductible. Now this goes back into what I was talking about earlier. There's two types of claims. There's all other perils, or there's hurricane. So with this example now, we're just going to go into all other perils. So let's say their deductible is $2,500. All right. So they're going to subtract that from that. Okay. So let's say then you're going to say less recoverable depreciation. So let's say that's about $7,500. I'm just trying to make the math simple. So the next line you're going to see is they're going to say net ACV, and once they subtract the $2,500 and the $7,500, they'll get a check for $10,000. Okay, and then below that, you're going to see if recoverable depreciation, say, is recovered. And then they'll add that $7,500 back in, and then you're going to see net claim. And what they're going to get from the insurance company is $17,500. Okay, that's usually how it works when it comes to the approval letter. And of course, they break it down a little bit more. I would be here forever explaining this, but that's usually how that letter looks like. And I'm gonna tell you right now, homeowners are gonna want you to do the work for the $17,500 and not pay the deductible. But that's insurance fraud, and you can't eat the deductible. So do not let the customer fool you into doing that. Okay? So you get that ACV check, you order the material. Okay? Next thing you know, you go into the install. You install the roof. Okay? And once you install the roof, you complete the work. You get to the invoice. Now in the invoice, you're gonna charge you're gonna have the replacement cost that you charge. You have to show the deductible. Now, if there's any unforeseen damages, like let's say there was double layer of this, or there was cracked trusses, anything else, you can apply for a supplement. And get additional funds. But when you invoice the customer, it's going to have their deductible and what it costs to do the work. Once you do that and they get it and they process everything, they're going to release two things. They're going to release the recoverable depreciation, and if you did it right or they approve your supplement, you're going to get a check for the supplement. So on most insurance claims, a lot of times you should be getting 3 checks. You should get the actual cash value, the recoverable depreciation is the second check, and if you do things right, the supplement. This is for unforeseen damages, stuff that the adjuster didn't get, or code upgrades, or stuff that, let's say the house was out of date and you had to change like new plumbing or electrical or anything like that where it was out of date, and when the inspector came they said no, you got to do it this way. So you can charge the insurance company for those unforeseen damages for code upgrades. It's unforeseen damage, unforeseen stuff, and it's things that you have to do to make that area or the damages up to code and recoverable, meaning to restore them. So that's where the supplement charge comes into play. And that's where, if you have someone who's really good at all 3 of these, you'll be pretty good. Once you've gone through the insurance process a few times, you kind of get to know what's going on. You'll get used to looking at the exactaments. You'll get used to looking at the approval letters. You'll start getting used to dealing with insurance adjusters, and then you'll get more comfortable with it. But basically, this is usually how the insurance company goes. And I'm just gonna recap it real quick, okay? So you got all other perils, or hurricane. Claims. And what's just going to determine that is date of loss. All right, with me so far? And then you're gonna meet with the adjuster. And then you're gonna get, I guess you say permission from homeowner to assist with claim. I would get this in some form of writing, some kind of contract, service agreement, anything. Okay? And then once you get that permission, okay, you're going to send desk adjuster an estimate. Your estimate of what it's going to cost to do all the work. Okay? And one thing I would say, follow up, follow up, follow up. And then, again, there's going to be that determination period. It's usually 2 to 4 weeks. And then you get the approval letter. That has the estimate. And again, it's going to be an exactimate form. And then you get the first check, which is usually the ACV, actual cash value. Okay? Once you get the ACV check, it's install time. You do the work. Once you do the work, you got to send an invoice with costs and deductible. And once you get that, you'll get the recoverable depreciation. Okay? That'll be the second check you get. Now, let's talk about the supplement. Okay? Supplement is for unforeseen damages and code upgrades. Now, if you know anybody with Storm Chase or whatever, there's like a whole bunch of other shit you can jump into there. And there's classes on Exactament or whatever. But these are usually the two things that you usually see when it comes to supplements. So, example, anything you need to make that up to code, any unforeseen damages, double errors, you name it, you can do that as a supplement, and then that's going to be the third check you get. So I hope you got enough information from this. I hope I broke it down enough that you got a better understanding. If there's something you need me to go over a little bit more, let me know, and then I will break it down even more for you.